Hello, hello, hello. Welcome to Al Stock Trades. In this video, we're going to go ahead and give a quick overview over what's happening right now and what's the chatter that's going on Wall Street. So first things first, just to give you a quick update, the United States president, as well as many regulators, such as Secretary Janet Yellen, went on live and on record stating that the banks, such as Silicon Valley Bank depositors, not the investors, and also Signature Bank's depositors, will be able on Monday, tomorrow, to have access to their capital. Now, we already started to see a contagion basically spread like a virus when Etsy went ahead and reported today that because of the Silicon Valley collapse, if the government essentially doesn't step in, they're not going to be able to pay their clients. And just a quick newsletter here, you can basically see Etsy delays payments to Silicon sellers due to Silicon Valley collapse. In any case, many people that are invested in the stock market this weekend searched through their portfolios to see does their company or is their company affected by this bank run? Okay. Now, what's interesting here is that the government now is essentially going to offer liquidity to the depositors. But a lot of folks are raising the fact and asking the question and saying, is this like bailing out and stimulating the economy in a way? Well, it's tough. It's a tough question to answer because where is this money coming from if it's not coming from the taxpayers? So these are the issues right now that needs to get resolved. Is this going to get political? Of course it is. But the biggest take-home message that I want to bring to my subscribers here is that you have a Federal Reserve that is increasing interest rates and doing quantitative tightening, but at the same time now starting to bail out clients because of a bigger collapse of the financial system. Now, you can see this is a paradox. On one hand, you have the Federal Reserve trying to essentially fight inflation. And on the other hand, you have the Federal Reserve trying to limit a contagion that will basically break the backs of the financial system, causing many small businesses, like, for example, Etsy, which is not a small business, but many small businesses inside Etsy, not be able to do their job. And just imagine the ramifications of this. If you haven't heard, Roku has over $100 million in Silicon Valley Bank. Coinbase has around $240 million in Signature Bank, and that bank shut down. So what you're basically starting to see now is that the economic form is signaling that it is teetering into a recession. So many folks, especially at Goldman Sachs, went ahead and reported, and we can go ahead and check in our exclusive chat here. I went ahead and posted it a while back here regarding what Goldman said. In light of the recent stress in the banking system, we no longer expect the FOMC to deliver a rate hike at its March 22 meeting, with considerable uncertainty about the path beyond March. So we're laughing at this because, well, what does Goldman Sachs, why are they saying this, right? Well, we went ahead and essentially checked Goldman Sachs insiders, because if you look at the insiders of Silicon Valley Bank, you can basically see that they were selling back on February 27. Well, you do see some sells. We don't know, particularly probably have awarded options. We have to do some deep diving. But this particular analyst at Goldman does have a point, because the economy is being stressed right now. And we literally could have a global financial crisis if the government did not step in. It's very clear that what else could there be another crisis based off of these high interest rates? We already know that if mortgage rates are 6%, and if the Federal Reserve keeps increasing interest rates, then mortgage rates are going to be 7, 8+%. What is that going to do to the housing market? What is that going to do to retail, real estate agents and X, Y, and Z? There's going to be a big problem here. Okay. So what this tells me is that we are slowly nearing the bottom, and we are nearing peak fear. So if you go ahead here and look at this graph and take a look at soft versus hard economic surprises, you can see that we obviously now are in the green area, the bottom. And the last time we were here, we were significantly right before a strong run. We went ahead and preceded a crash. Okay. Now, what you don't want to see is a hard above one algorithm, because then you know the stock market and prices are hot. Because we are here, we know that the annualized return is 10.8%, 6% of the time. So what this tells me is that we could see another strong drop based off of what we've been essentially seeing. Now, if that doesn't make sense, you have to see the other graph. And if we go ahead and go to smart money, we can see we'll go to, let's say, February. Let's go to the start of January. Okay. Just to make things easy here. Okay. We'll go to the start of January and we'll play this out. Okay. So as you can see, as we move along, January 5 and January 6, and we move on between smart money and dumb money, we start to see something different here. On January 12th, we start to see dumb money start becoming buyers of the market and smart money becoming sellers, right? Or not, let's say, participating in the market. Now, many folks were like, this is weird. And, within our stock terminal, we were asking questions like, perhaps, why? Why are they doing this? Do they know something that we do not know? And this trend has continued. In fact, January 18, holy moly, dumb money literally went ahead and broke through the trend line record. And that's why stocks went literally soaring. But then smart money continued to lose confidence, and then they started to decrease. And then dumb money kept on, going. So, and this basically persisted until January 30. And then January 31, we saw a huge divergence. Smart money went ahead and essentially left. And we can go ahead and play this out. Then we have February 10, February 14. Again, it's still oscillating. Obviously, smart money is on the opposite ends of dumb money. And we can go ahead and continue oscillating. And then something happened here. February 21, February 22, stocks basically started to drop. Dumb money basically went ahead and started to fall while smart money is capturing. And now, as this contagion gets bigger and we drop all the way down here, dumb money has dropped significantly down as stocks drop down, while smart money basically comes in for the kill. Now, what's interesting here is that if you go ahead and look at the equity hedging index, you can see, again, if we're up top here, it means that we are nearing the bottom, and essentially it's a perfect time to buy. And if we go down, we're capturing the gain, which is why a lot of stocks went up recently. Well, guess what? Now we're increasing, which means that we may be in for another crash, or we may be in for a recession and some form of a stock market crash. Now, we don't know, and the stock market's unpredictable, but you have to understand something right now. We already are starting to see the banks get stressed, especially banks with amazing balance sheets. The only issue they had right now is they tied up their assets in a long-term treasury and mortgage-backed security. And it's interesting, just imagine other companies right now that are on the verge of collapse if the Federal Reserve continues to increase interest rates. And the problem is when is the Federal Reserve going to stop? Well, many folks and many Wall Street analysts are thinking that the Federal Reserve may stop in March. Now, I just wanted to basically play this out to you, but the biggest thing, and you might scratch yourself in your head right now, be like, what are you talking about, Al? How can you say this? Just look at the S&P, Dow, and NASDAQ. They are soaring right now because the government is stepping in. This is basically, they're saying it's not a bailout. Ladies and gentlemen, this is a bailout. This is a bailout, okay? Where is this money coming from? Okay? So what this is telling you is this is a paradox. How are they bailing out the depositors that do not have insurance on their banks, because if they have over $250,000, that is uninsured from the FIDC standpoint, which means that they have to buy secondary insurance. Well, the government now is stepping in and bailing out the depositors that don't have the insurance of over $250,000, because if they don't do that, then many people are going to lose their jobs. Etsy's going to go down. Roku is going to go down. Coinbase is going to lose literally $240 million. They're going to go down. And it's very clear that the Federal Reserve is bailing out the economy. And how do you have a Federal Reserve bailing out the economy at the same time the Federal Reserve trying to basically quantitatively tighten and at the same time raise interest rates? Things don't match up. So what I'm going to be looking at is the 10-year Treasury and the 2-year Treasury, because I want to know, is the bond market going to call the bluff of the Federal Reserve? Okay, and this is what a lot of folks are looking at right now. It's pretty complicated, and I'm trying to basically break it down to you systematically on how this thought process works. And you're going to hear a lot of people talk about this during this week regarding how the Federal Reserve is pretty much stuck between a rock and a hard place. Now, the issue here is inflation, is sticky. It's at 6%. It's so sticky. So this is very complicated. And, I'm very happy that I'm not in Jerome Powell position right now, because this is very difficult. What would you do, right? And at the same time, we have a problem with Ukraine and Russia, and then oil and all these other issues, and so there's a lot going on right now. Okay, so this is the story's developing, and we're going to keep you posted, and we're going to continue basically trying to break this down. But what it looks like to me is that the Federal Reserve is going to start, I believe, getting to a position once another domino gets hit. There's going to be a high probability that the Federal Reserve is going to start easing. Now, you're going to talk to me. You're going to be like, what in the world are you talking about? How are they easing? Just look at Michael Burry. Just look at it. 2000, 2008, and 2023. It is always the same. People full of hubris and greed take stupid risks and fail. Money is then printed because it works so well. And that is exactly what Wall Street is looking at now. When is the money going to be printed? When are the money printers going to turn on? And the faster we are on a verge of collapse, the better, essentially, these printers start turning on. Ladies and gentlemen, good night. I'm going to sign out. Please ask any questions if this does not make any sense. I'll see you on the next one.